When we look back at 2025, the biggest story in finance wasn't some hot new stock or another tech boom. No, it was a single rule change that completely blew the doors wide open for cryptocurrency. And if you're someone who thought crypto was just a niche market for tech experts, well, think again. This one decision changed the entire game, and it all started with a really simple question. What if you could actually buy into Bitcoin or Ethereum just as easily as you buy a share of a company, right from the brokerage account you already have? No special wallets, no complicated keys to worry about, none of that. It sounds so simple, doesn't it? But for years, that was the big hurdle, the one thing holding crypto back from going truly mainstream. And then, in 2025, thanks to a landmark decision by the SEC, that dream finally became a reality. So, to really get why this was such a huge deal, we got to go back in time a little bit. Before this change, the crypto market was kind of like a walled garden. It was tricky to get into and, honestly, even harder than navigate safely once you were in. Yeah, and the road to get here was, let's just say, it was pretty bumpy. Remember the crazy boom of 2021? Well, that was followed by the market crash and all the volatility that came after. For the average person, getting into crypto meant messing around with complex exchanges and having this constant fear of getting hacked. And all that risk, it kept the big traditional money far, far away. That is, until the SEC finally made its move in late 2025. Okay, so let's break this down. The difference is just night and day. On the left, you've got the old way. It meant juggling different crypto exchanges and managing your own private keys. Those super long, complicated passwords that, let's be honest, are terrifying to lose. Now look at the right. The new way, you just use the brokerage account you already have. It's a regulated, professionally managed product. Just like that, the biggest barrier to entry, it just crumbled.
So what was it? What was this magic key that unlocked the whole thing? It's a financial product, and it's called a Spot ETF. And it turned out to be the perfect bridge between the kind of wild world of crypto and the traditional financial system we all know.
Okay, so what on earth is a spot ETF? Let's break it down. An ETF, or exchange-traded fund, is something you can buy and sell on a stock exchange, just like a regular stock. But a spot ETF is special. It's special because it directly owns the thing it's tracking. So when you buy a share of a Bitcoin spot ETF, the fund literally goes out and buys the actual Bitcoin and holds it for you. You get all the price exposure without any of the technical headaches or security nightmares. And look, this approval wasn't just some tiny rule change. This was like dynamiting a dam. The floodgates just burst open. Suddenly, crypto was seen as legitimate in the eyes of the biggest players in the entire financial world. So who's flooding in? We're not just talking about everyday folks. We're talking about the whales, the massive institutional investors, pension funds, retirement funds, mutual funds, these super conservative money managers who control trillions of dollars. Before, they were basically forbidden from touching crypto directly, but the ETF gave them a clean, regulated way to invest, and it also made it unbelievably simple for the rest of us. And the amount of money we're talking about is just staggering. Analysts started projecting that billions, and not just billions, maybe even trillions of dollars from the old-school finance world would start pouring into crypto in 2026. Now, don't get me wrong, regular investors like you and me are a big part of this. But just look at the difference here. The money coming from the big institutions, it's not a stream, it's a tidal wave. It's on a whole other level, and it's set to completely change the entire crypto market.
Okay, so it's easy to think this is just a Bitcoin and Ethereum story, right? Nope. The door that just opened leads to a much, much wider world.
See, once the SEC gave the green light for Bitcoin, everyone immediately started asking, okay, who's next? And analysts quickly pointed to other projects. You have coins like Solana, known for being super fast, or Avalanche and Polygon with their huge ecosystems. They all became top candidates to get their own ETFs. This meant the investment menu was about to get a whole lot bigger. So you might be wondering, okay, what does all this new money actually do to the market? Well, it's kind of like a 1-2 punch. First, you get this huge layer of legitimacy from institutional adoption. But second, and this is a big one, you get the potential for more price stability. With these large, long-term investors in the game, some of the crazy, wild price swings we're all used to could actually start to calm down. All right, that was a lot, I know. So let's just boil it all down. What's the big takeaway here? It's really a 3-step revolution. Here's how it happened. First, regulation kicks the door open. That SEC approval was everything. Second, the big mainstream money finally feels safe enough to walk right in. And third, and this is the really big one, crypto stops being this niche tech thing and starts to become a real legitimate asset class that pretty much anyone can own. And all of this leaves us with one huge question to chew on. With all the big banks, the pension funds, and the regulators now in the game, does this mark the end of crypto's chaotic, unregulated Wild West era? And what does the future look like for an asset that has finally, maybe, grown up?
Subscribe and visit Web3 Newswire for more updates on ETFs.